Hello and welcome again on Stocks Advisor channel. Today we'll talk about Lithium Americas Corporation traded at New York Stock Exchange, ticker name LAC. Well, like as many other stocks discussed today, is also ongoing a major correction after having a nice series of growth from July from the level of let's say 3 all the way to 28. Really incredible increase, of course, and inevitably we should have a correction. This is the second big correction. The first one took place in October, where after forming classical and nice kind of not finished triangle, it actually went to, it resolved with a spike, and now looks like we are forming another structure, maybe another triangle-like formation will be seen, not yet clear, but we see at least a confirmed declining top, which is this level, let's call it R1. And still the question is, from today's action, will we pierce it higher? If we will pierce it, we might say that, okay, we are creating an upper channel. If not, then the question would be how low we could decline further. And since it's a very interesting moment, we need to be able to play with both opportunities, because also if you look at MACD here, after having a series of waves, actually after triple wave, now it's showing a shoulder, extended shoulder, and this shoulder is still bullish, so it might even exit with quite a big spike, in contrary to previous stocks, other stocks discussed today at our channel. But this one is still might be giving some nice spike. If not, it could decline further, of course, but the distance where it could spike is really huge, because the tops here, the first major resist level will be somewhere in about, let's say, sorry, about 22, 23. So this is interesting opportunity to enter, which it's better not to lose. Therefore, for this one, it will be an immediate buy already within the size of the current candle. Here you could see. Now let's write it here in the center. First, we'll write it here. So this area, this candle you can buy, and if you would write it with, let's say, with the numbers, this would be something between 1530 to 1607. So that would be the first area to enter here. And then if we pierce immediately R1 level, then of course it could go higher. The first reasonable resist would be moving average 50, the blue line, and other one will be this red line about 23.22. And speaking of moving averages, we have 3 moving averages here as always depicted at our daily charts. These are moving averages 20, 50 and 200. Here on the left you see their legend. So you can see that indeed moving average 20 is declining, actually also forming kind of R1 line. If moving average 50 will also do similar one, if it will be double decline, of course we will know it's a major correction taking place, and we will most probably go even lower, because then the declining channel, and this one, let's name it R2, will be also confirmed, and then the further trade strategy will be volatiling and bouncing between R1 R2. But if moving average 20 and 50, instead of both going downwards, will start playing around each other, waving like we saw in the action of November, then it would mean that it will be more flat move, let's say, more straight move, more kind of consolidative move, and then we might go higher levels of trade. But to be prepared for both, this would be the first entry, a very, let's say, reasonable in the sense of mitigating risks and not losing opportunities. And whenever the spike is there, of course, we can do nice profit, but I always advise from 10 to 15%, although here it's closer to 15%. It's a very fastly moving chart, but still, it's better to take profit in time and then either re-enter or check other video opportunities. We always post many stocks at our channel. You can always find something interesting there. So if this is the first scenario, so if we immediately rebound, this would be the first entry. Should we decline, I mean, should we have further, let's say, correction and reconfirmation of R2, then of course we just need to wait till R2 is reached and wait for another support level, which if you look at this price action from October to end of the year, is the area where these support levels were formed. Therefore, you can see that the next entry, and also it will be triple support line there, because also moving average 200 will be there, and R2 level will be there, and this channel will be there. So it's therefore the best opportunity to enter, and it will be between 11:30 and 13. So let's write it here. The second channel to enter, still caused by technical correction, and let's say without any bad news, a negative catalyst still there, would be between 11:30 and 13. And then of course we need to think what would happen next, because if we are not having rebounds from R2 to R1, or maybe even high with volatility and further recovery, then it would mean that we should have also some negative catalyst. And if negative catalyst kicks in, you really need to be prepared for severe average down. It's not that the price goes there, but this is just part of our strategy that we always discuss, because we want to base our trading strategy, and we do base it on 3 pillars. One is technical analysis. Second one is non-linear average down. That's what we discussed now, based on resist support levels. And the third one is mitigation of the risks, especially risks due to negative catalysts. This could be company reorganization, some bad news inside, etc. The reason for that is because the stocks are not just charts, are not just technicalities, but also real world things like companies, people, and real stuff happens there, which might also come back to the market and let's say get engaged to your price and shoot it down. So to mitigate this possibility, we always need to keep some funds. And speaking of where to mitigate it, where to enter, of course, you need to look to the principal levels from where that were historically formed, from where the price almost cannot go lower. And if you look at these principal levels here, it's clear, it's very simple for this one. It's between 7 and 8. You can see this is the small trading channel that was formed from August to mid of September all the way. So this will make it a very nice, let's say, mitigation or risk mitigation should we have a negative catalyst. So while others will be taking loss or stopping loss, you just enter here and prepare for exiting with a profit, with the price, with the profit target being 10 to 15%. So whenever the rebounds from here takes place, then maybe R2 will work as an attractor of the price. You can make your profit. So it's not that we predict it goes there, it's just that we want to mitigate if it goes there. And this is so therefore the trading card for LAC at the moment. If you are more for a good numerical representation, if you like more graphical one, you could look here. And speaking of how to average down, it's still quite positive here. There is no indication of something severe to happen. So it's a classical 5 portions trade, meaning that you can enter with 1, 2, 2 approach. What does it mean? It means that the funds that you would like to play here, you can split in 5 portions. So you can buy with 1 portion in the first circle. You can average down with 2 portions in the second circle, and again average down with 2 portions in the third circle between 7 and 8 should a negative catalyst kick in. So this way it will be the best mitigation of risk versus profit, which will allow you to exit with a profit or with a draw. Anyway, it might take a little bit more time, of course, but should be less risky for taking losses. Of other interesting parameters to discuss, it's still very interesting that the volume is not engaging here. So you see not much volume of today. It's even lower than the normal, or you can say within the normal levels of November, which means that not everyone is jumping in. So people still anticipate indeed that we could decline all the way towards R2, which is one of the possibilities, and also confirms that it might be there. So still we are within the play. Of nice parameters is that RSI is recovering now, still might be waving, but it's on a lower part, so slowly creating a positive pressure upwards. So overall, Lithium Americas is a good company to play with. Just if you know it, do it cautiously. Of course, it is patience exercise as well, because if you look the levels, the numbers between the levels, these are huge, where is almost 50%. So you need to know what you do and actually be sure in your strategy and your approach. So with this being said, good luck with Lithium Americas. Also, please don't forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.